Hello, good evening. It's Adil again, bringing you a review of the FTSE 100 for the trading session Wednesday, the 16th of December 2020. Be sure to visit my site, www.market-analysis.com, for all the videos I upload and then charts now and again. And in terms of my activity, really, it's mainly on Twitter and throughout the day, tweeting any interesting insights from obviously traders around the globe, and obviously some charts and these videos as well. And let's have a look. Okay, so in terms of the FTSE 100, then certainly close week. Okay, and I did explain to you the actual pattern that was in play, and certainly has come into fruition in terms of the 60-minute chart. Now, I did highlight to you yesterday that you have this H&S formation with an H&S target of 6400. The pivot low for the day was around 6480, and as you can see here, we've broken the actual neckline now. So the neckline is at 6520, provided we remain below that. Okay, and we are now looking at a lower low and a lower high. Okay, interesting scenario obviously is now setting up in terms of the Fibonacci retracement. So we take the pivot high, take it to the pivot low. Any potential, I mean, I know the out of hours market currently trading around 6547, so I've actually taken a short position on this on the live analysis service. So those of you that want to join my trades, you can certainly join the live analysis service by going to my website, and obviously just click on the tab there, live analysis service, and the instructions on how to join. Just contact me and I can add you to the service. The first month is free, and obviously if you enjoy that and you think it gives you valuable insight and helps your analysis and your trading throughout the trading day, then you can continue to remain on it. If not, just give me a review, an honest review, and I'll be more than happy with that. Okay, in terms of the actual the lower high then, so provided we remain below. So on the one hand, obviously you've got the H&S formation, so you have to remain below the neckline at 6520. If you fail to do that, then again I'll be looking for a lower high, hence the reason why I've taken a short position, because not only is there a H&S pattern, but there's also a potential lower high scenario. So there's two bearish arguments here. Fundamentally, in terms of the bearish argument, copper is into resistance, oil is into resistance. The actual wisdom tree, if I bring up the wisdom tree, as you can see here, this is a commodity index, okay, which is quite popular, and that also, as you can see, is into resistance as well. Okay, so given the fact that the commodities are into resistance, we do have a Fed day tomorrow, so again, don't be surprised if that certainly is surprising the downside, given the fact that obviously markets are at new highs, and the Fed can certainly afford to indicate towards a more hawkish stance, given the fact that fiscal stimulus is in the pipeline, and they certainly need that wiggle room. Okay, now the US dollar certainly is extremely oversold at present. Have I got the dollar index here? Okay, I need to add the dollar index later on. I won't do it now. I'll hopefully do that for the next video, give you an insight in with regards to that. So again, commodities into resistance. Fed certainly expected to be hawkish in my view, given the fact that the reliance is on fiscal stimulus. I think we've got Pelosi, Schumer, etc., and Mr. Mnuchin all discussing have a potential meeting very soon. And again, so obviously focus will be on fiscal stimulus, and again, that is an argument that obviously indicates a weaker dollar. Okay, now the dollar certainly has been battered beyond oblivion recently, so, and that obviously has indicated a rally in the commodity sector on the back of a vaccine rally as well. Now, Chinese data was strong overnight, so again that certainly did help the risk on initially, and the European markets certainly have been resilient. Now, the bearish argument for the FTSE, as we already know, London tier 3, obviously London is the bedrock of the UK, the taxes, revenue, etc. certainly seems to fuel the country, okay, and the heart, when that goes under lockdown and the financial strain, then that feels, the rest of the country unfortunately feels it as well, whether you agree with that or not. Okay, that's the scenario, and obviously the new strain of the virus has again sparked concerns. Okay, and then obviously the Brexit no deal scenario certainly sparking concerns as well, and that's one of the reasons why the FTSE certainly has been under pressure. In terms of the insight into the FTSE, again, let's just have a look here. So 60-minute chart, pretty self-evident, lower high, lower low, and H&S formation with a target of 6400. In terms of the 10-minute chart, let's just have a look here. Obviously we flushed. We pushed higher initially on the back of Chinese data. We sold off on the back of London tier 3, and obviously concerns regarding Germany and the rest of Europe and New York lockdowns, etc. And again, for now, the market has rallied. We did close a gap, which is quite interesting, around the 6490, 6486, and again the market's rallied since then, so impressive. and obviously I've gone short at this fib 75% retracement, looking for that lower high and lower low theme. Okay, and the unfilled gap will be around 6513 for those trading, and then obviously support is seen at 6490 on the downside. If we crack the 6490, then it opens up the support at 6460. We've got support at 6430. Okay, so watch out there in terms of the downside. Upside, again, we have to always consider both scenarios. You can't obviously be obsessed with one side, and even if you're wrong, your stop loss is there obviously to protect you. So on the upside, obviously, if we get some sort of announcement, I mean, it could be a new vaccine that's probably got a 99% efficacy rate. I mean, we could get a potential deal with regards to Brexit that could certainly trigger a rally. That's not something that we can control. As traders, there's two types of variables, endogenous and exogenous. We can only account for the endogenous variables that are in the system. Exogenous are out of the system, and that's why the stop loss is there, to protect you, given the fact that obviously the unknown comes into the known, okay, and therefore obviously triggers your stop loss, I'm afraid. Okay, but that's part of trading. It's that's the expense that we pay for traders, okay, or being traders, given the fact that our obviously costs are significantly low. We need really is a computer and a broadband signal, obviously a good mentor and with good knowledge, etc. Okay, so in this scenario here, resistance again, like I explained, 6560 zone, 6570. You've got 6580, and then you've got gap fill at 6600 and ultimate resistance at 6630. So that's the game plan for tomorrow, folks. Wish you the best in your trading, and be sure to visit my site and obviously catch me on Twitter. Goodbye now.